We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at the CFTC COT reports. And we don't look at them all the time because sometimes it's just plain old boring. But at the end of the year of 2019, there's something very interesting going on. Now, to look at the COT reports, they can be a bit dull because the data you get to see was published on a Tuesday and you get to see it on a Thursday or a Friday. And what's more is that the banks get to see it before the Tuesday. Now, what's interesting about the COT reports is whether everyone's loaded up on one side of the boat. Either they're loaded up on the bow or they're loaded up on the stern, or you can answer the question are they going to move from the bow to the stern and the boat moves up and down. So you want to see where the positions are loaded up one way and swinging to the other way. Now if they're loaded up one particular way, and that means they've got room to move the other way, so the whole market can change. If everyone's loaded up long and the market's not really going anywhere, that means they can unload and go short. It's just like a rubber band pulling, expanding and contracting. Now, what we have here in the US dollar, which is the most important currency, everyone was loaded up on the longs. So this is the green area. And now we've just the black line, which is the net between the longs and the shorts, just made a lower low just in December. And what's important is that the people who want the positions for that to go down have not loaded up. You see here? Here they loaded up and it went down. And here they were loaded up. Whoops. Come on. Went down but not so much. For example, here they loaded up. So that means the shorts, they loaded up and dragged it down and then they took profits. Loaded up. So as you can see here, no one's loaded up on shorts, so that means it's got room to move. That means the move on the upside, they've been frustrated with getting the US dollar long, they've held it for a long period of time, hasn't really exploded up, and now there's a bit of capitulation. The question is whether that capitulation leads into a lower US dollar. Now what's interesting is that Trump's talking trade deal with China, signings and what have you. And part of the trade deal will be a foreign currency component, and obviously that will be a lower US dollar because the lower US dollar helps Trump and it also helps China. So that's maybe a reason why longs have started to give in and realise that US dollar breaking 100 is not going to happen, and it's more likely to go to 95 or 92. So yes, room to move the US dollar down. And this is sparking interest in other currencies which are anti-US dollar. So if you're a trader, you need to have the positions with the room to move, and it clearly shows that the downside on the US dollar has got plenty of room to move because everyone's piled into the long side, and yes, we have got plenty of room to move on the dollar. So this is we'll have a look at the euro, which is a huge portion of the US dollar move. And as you can see here, those who are shorts, I'm looking at the longs, so the large specs here, sorry, and the commercials, and they're starting to realise, as you can see with the net black line, that the direction of the downward move in the euro is running out of future lows, therefore they're starting to give up. See how the red line collapsed up here? Positions have been closed. The euro dollar is finding a bottom. Just like the US dollar saying that there's room to move and for the euro dollar to get bullish. For example here, that's how much positions can expand. which could easily take the euro, up to 110. Oh, come on. the Aussie dollar. These are anti-US dollar trade, so if the US dollar goes up, so the Australian dollar goes down, or vice versa. Yep, if you look at the large specs, these are large specs here. Excuse me. Whoops. They've been in a position of the shorts going down, starting to give up and realise it's not going to happen. And maybe reversals on the cards. A bit more sheepish the Aussie dollar, not as obvious as the euro. Where's okay? Japanese yen gives us some more clues. This is more interesting. So we've got, this is the yen. Up move, boom, boom. Very poor price movement, see up here. And as you can see, the lower highs in the black line, which is the net between the longs and the shorts. The yen is, this is rolled down. Quite easy to reach there on the US dollar going down. I've inverted the Japanese yen trust. That plus sign means the FXY is turned upside down, so it's easier to read with the COT data. That's got room to move to go down. And let's have a look at Bitcoin. This is the futures. I think the futures market's showing a bit of speculation in the bottom. They failed here. For example, they got out of there, loaded up again, they got their asses kicked out again, now they're starting to load up again. But they're not that confident, so there's not much going on in Bitcoin. Obviously, how you see them all red, that means they're more bullish than they are bearish. And open interest is interesting. There's got plenty of room to move in open interest. See how the big rally dragged up with open interest? Well, there's obviously more room to move on the upside with open interest. Now, what's interesting? Okay, we suspect a bit of a slump in the US dollar. We'll say a slump because we don't know how far it can move. But gold's really expecting a decent move. The thing about open interest is the highest ever. Now, it doesn't mean it's bearish. It can mean it's bearish, but it doesn't really mean. If you look at this period here, open interest highest ever, open interest highest ever, open interest highest ever, open interest highest ever, and price skyrocketed up. That means that contracts are opening up and enjoying the ride because of such a great run. So open interest highest ever, price on a great run. Positions are pretty much loaded. As you can see, all the red here. This is the swaps. They're all loaded up, highest ever. The commercials are loaded up, highest ever. And the large specs just creeping in. And what's more important about the large specs, if you look down here, oops, sorry, this part here, no one's betting on it dropping down. So they're all loaded up, ready to go higher, but obviously a capitulation of this market would see a dramatic reversal, okay? Because they're all loaded up on the boat here, but they may be loaded up on the boat because it's going to go higher. And quite frankly, if they're that confident, people loaded up when they're that confident, and they're looking at a rally similar to this, you can easily see gold go from, what is that, 600. That's open interest. I'm looking at the GLD here. The GLD could go from, put on easy 80, 90 to $100. The GLD could easily go to, break 200. That's 2,000 on the futures. So loaded up, they're confident. Yes, they're on one side of the boat, but just like the story over here in the 2010-2011 rally, it could really move. That's because they see what's going on in the US dollar, they see what's going on in the rupee market. But be warned, if the US dollar ever does gain any strength, the unwinding obviously could drag price right down to 1100. Silver, a bit harder to read, not as exciting as gold. I think it lags. The only good news in silver I would suggest is that we're getting a bit of a higher low in the net position, and the net position who are bullish are holding up. Open interest is highest ever as well. Where is that? Highest there, highest there, highest there, highest there. You have to watch that one, but silver's, you know, the only, of course, no one's really. They've unloaded the shorts. See how when the price went down, the shorts loaded up, but they've unloaded the shorts. Not that confident. So yep, silver's ready to move as well as gold, but not that. Obviously, gold's a star. Crude oil, the last one. This gives us some clues in the US dollar. And as we can see here, the black line, which is a net between this is the large specs, the net between the long and the shorts. The longs are loading up. You probably can suspect, for example, I think back to the range again. Once again, if you look down here, see how the red expanded on the drop. The capitulator, they're not expecting to go down. They're making way for price to go higher. No one's really expecting it to go down. Open interest has got plenty of room to move. Look at that. People can load up there. So I don't know if the crude oil can go break the $75 mark, but it can definitely test 70. So of course back to the I think we should look at one more, the euro dollar offshore. Euro dollar offshore rallies when people are hiding, or sorry, not hiding, holding dollars offshore. This is the price to hold dollars offshore, and then they're fearful. So as you can imagine, when there's a cut in interest rates of 3 or more, I think they've done 3, it does tend to hurt stocks. Well, the Fed's in defensive mode. Come here. But this time round, people believe the Fed has been 100% of this market. Whereas the rest of the world, these are the bankers of the world, are saying, don't believe you, we're holding US dollars because we need US dollars to buy oil, to buy energy, and we need oils in our bank accounts to pay for oil and energy if something goes wrong. And this is a sign of caution, a huge sign of caution. And obviously if we get any excitement up like that, or like this, it's on like Donkey Kong. Sir, come here, click it. That means people are very worried. So back to the US dollar again. The clues are the people who are expecting the US dollar to go higher over this long boring patch have not been rewarded. They have given up some of their positions in December. Yet those bears have not loaded up yet, but they've got plenty of room to move. So if those have capitulated on the longs, soon, if it is true, those will start to benefit from the shorts, and they'll load up on the shorts and drag the US dollar down, most likely to this part here, and they'll have consequences for the rest of the market. Now, is that based? That could be primarily based on Trump doing some sort of China semi-trade deal with a currency component in an election year. Trump knows he can't get Congress to do a tax cut. He can't get Congress to do infrastructure spending. He doesn't want to go to war. They obviously create spending. So the only way you can get some sort of stimulation in the economy is if the Fed prints money, which they've done, or they get the US dollar down. So I think his option is to get the US dollar down, obviously to a certain degree, back down to somewhere between 90 and 95. And we'll see that over the weeks to come with price action, and it'll be confirmed with the COT data. And this will have wide-ranging effects on the anti-US dollar trade. That's the euro, the Aussie, Bitcoin, gold, and most likely the stock market. Oh, one last thing in the stock market. It's quite interesting. Where is the Dow? Looks like in the last couple of weeks, as you can see, price went up quite aggressively. But the longs, they sold into it. And the people believing this market could go down built a position. For example, here, the red expanded when price goes down. Right? So I'm just saying is that there could be some sort of correction going on here. As for example, here the longs capitulated, boom, and the price went down. Capitulated there, but obviously reversed. Capitulation there. See that price went down. Capitulated there. So either one of these was wrong. We'll have to wait and see. But remember January of 2019. Where's January? There we are. Last couple of Januaries. Bang, bang, bang. Yeah, January. Look at that. January fell into January. Was that right? Jesus. December collapsed in there. Okay, so that was December sell-off, January recovery. Okay, so yeah, mixed messages in the Dow. So next couple of months, China trade deal, currency component, with some weakness in the US dollar, sparking some rallies elsewhere. Thanks for watching.